Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with this local flat scenario where we're looking for an A, B and then a 5-wave C to the downside, after which we then expect continuation to the upside and higher prices to come. In this wave C, we are then looking for an ending contracting diagonal because of this first structure to the downside in very likely an A, B, C. And in an ending diagonal, what we like to see is all of the waves being zigzag family structures, where most commonly the waves are going to be a simple zigzag in an A, B, C to the upside or the downside. But you can also have a double or potentially even a triple zigzag, but that is less common. In this scenario, wave 1 is then already finished, A, B, C, looking for this wave 2, which either is already finished, or if we look for higher prices in this wave 2, we have to look for a double zigzag, A, B, C to the upside, wave W finished, looking for an X to the downside, corrective structure, and then another A, B, C to the upside, and then a wave Y, double zigzag in this wave 2. When we look at the Fibonacci retracement targets for a wave 2 in a contracting diagonal, the 382 is a less common target for wave 2 taken from the high to the low of 1, and the most common target for contracting diagonal wave 2 is between the golden pocket and the 786, which is between 44.3k and 44.6k. After this wave 2, we are then looking for price to move in again a zigzag to the downside in this wave 3. Now what is important is that the rules of diagonals have changed. There's now old and new rules. Make sure to check out the video I made about that, clicking on the card at the right top. But in the past, if wave 3 was longer than wave 1 in price, it would invalidate a contracting diagonal. However, if wave 3 now with the new rules is longer than wave 1 in a contracting diagonal, it is still valid. It will remain uncommon, it will remain something that is rare and not common to see, but if wave 3 is longer than the 1-to-1 of wave 1, it does not now invalidate a contracting diagonal, while in the past, if wave 3 was longer than the 1-to-1 of wave 1, basically wave 3 longer than wave 1, it would invalidate a contracting diagonal. Same is true for wave 4, where also wave 4 has changed. Wave 4 now in a diagonal does not have to have overlap with the price action of wave 1. Previously, that was a rule. If wave 4 did not have overlap with the price action of 1, it would invalidate a contracting diagonal. But now it is okay for wave 4 to not have overlap with wave 1. It remains uncommon, it remains rare, but at least it is good to know. Now currently, if we take a trend-based fib from the high to the low of 1 to the current high that we have here, the 1-to-1 over here is sitting at 43.1k. Again, it's uncommon to hit it. It's more common for wave 3 to be shorter than the 1-to-1, but it's good to know about this 1-to-1. If price is moving to the upside for this wave 2, this 1-to-1 will move to the upside as well, right? As we are then looking for this 1-to-1 taken from the high to the low to then the high of wave 2, wherever that is going to be. Eventually, we look for a zigzag in 4, zigzag in 5, finishing C. And if we look at the support areas here, then we have the first blue box below price between 43.4k and 43.6k, and then another one between 43.2 and 43.3k. After this wave C, we then expect continuation to the upside. Now, if you look at a second scenario here, where we first move up before then moving down, we are looking at a more complex sideways structure in a wave W, wave X, and then a wave Y. In this scenario, wave W is labeled a zigzag, and then an A, B, C to the downside. Then we have wave X being a complex structure, and then wave Y can only be a flat A, B, C, or a triangle, because if wave W is a zigzag, wave Y cannot be a zigzag anymore in a sideways double combo WXY. At the moment, the probabilities would then be higher for a flat structure in an ABC. Now, there is multiple flat structures. You have the expanding flat, where the most common target for B is between the 1.236 and the 1.38, taken from the high to the low over here, which is the most common flat structure if price moves to the upside. So this is going to be an interesting resistance area for price, for then a move to the downside in a wave C, and then a wave A, wave B, and then a wave C. And for a regular flat, which is something we should not forget, the common target area is between the 09 and the 105, taken from the same pivot, giving you a target between 44.6k and 44.8k. Eventually, you do expect a impulsive move to the downside, and then a 3, 3, and a 5 wave structure to the downside, where most commonly you see the lows over here taken, and then an A, B, C, where wave C takes the lows of wave A. If it does not take these lows, which can happen in strong trending environments, we talk about a running flat and price already moving up before taking these lows. But again, that has lower probabilities. If we look at the bullish scenario, we are looking at a finished corrective structure here in a WXY, where W is labeled a zigzag, X complex, Y a triangle, and you're going to be looking for a wave 1, 2 continuation to the upside, where this is then an ending diagonal structure, 1, 2, 3, 4, 5. Same rules apply as mentioned earlier. All of the waves have to be zigzag structures. Now this was first posted in Discord by Pierre, so thanks for that, Pierre. And I think it's a great scenario, but it's just a little bit early to call. When I think about diagonals, and especially ending diagonals, I like to wait for a wave 4 to be in, to be more like, to give higher probabilities to a scenario like this. And the main reason, which I explained in Discord as well, is because we're still in this range over here, and we only have a wave 1 finished, arguably a wave 2, but at least at the moment wave 1 would be finished, and then a 3-wave structure. And if we're in a corrective sideways range, the probabilities are higher for this structure now to be a wave B or a wave X of some sort, compared to this being a wave 1 for then a diagonal to the upside. So only if we get a couple of more zigzags to the up and the downside can we be more sure and will the probabilities increase for this scenario. But I do like the way of thinking of Pierre in the group. If we look at this range here, then we have been ranging throughout the day. Of course, a little bit of a drop at the beginning, but other than that, we have been going sideways. The main area of support was this daily naked point of control today at 43,750. And if I put my cursor on the exact low, the candle over here, you can look over there, and you will see the low exactly is 43,750. So that's actually very, very nice. We figured that one out during the live stream earlier today. We are ranging exactly in the middle of this volume profile on top of the point of control. We have the value area high above at 44.2k, value area here, the value area low below at 43.4k, which is one of the confluences in this target box that I mentioned earlier. So if price is moving down, keeping an eye on potential support over here, because I like to see proof of support as well as proof of resistance, of course, if price moves up, but also proof of support, whatever that is for you. RSI, stochastic, market structure changes, CVD divergences, anything that gives you confidence for a move to the upside according to your plan and entry requirements. Now we do have some CVDs. We had some small bullish CVDs over here locally that already played out as price moved to the upside. So we can now remove this over here. And we have bigger bullish CVD divergences between this low and the higher low that price has created. But even if price would move to the downside, as long as it doesn't take this low, the bullish CVD divergences are active. It has to be said that we still have bullish CVD divergences here. If I show you on the AGGR chart, then you can see higher low on price, but look on blue, lower low on the blue line over here, and almost on yellow as well again. But even with this pivot here or the pivot here, also on yellow, higher low on price, lower low on the CVD. So we still have some bullish CVD divergences over here. But with this pivot here already had one bullish CVD divergence that played out, which was between these lows, higher low in price, lower low CVD played out as price took the high. So another CVD divergence with this low has lower probabilities of playing out. Nonetheless, it's important to at least know about that we do have these bullish CVD divergences as well as the bigger one. Let me at least show you the bigger one as well so that you are fully informed. Over here, higher low in price, lower low on the yellow line, as you can see. So we have both higher degree, I suppose, higher time frame and more local bullish CVD divergences. If we then look at the probabilities of the different scenarios, then on the higher time frames, right, medium time frame, low time frame, which is like medium time frame 12-hour, low time frame 1 hour to 4 hour, we are still looking for price to move to the upside. But at the moment, we are in this range, and the highest probability are the bearish scenarios, or at least a continuation of the range scenarios, where we are not yet in that diagonal, right? We're not in a bullish diagonal to the upside. Probabilities are at the moment higher that price will eventually take the double bottom that we have over here, either directly over here or we first potentially move in a flat. But locally, This move here also retraced to the 886, taken from the low to the high, which means any move to the upside has a higher probability of being a wave C or a wave Y, which means probabilities are higher to then return to the downside as well, which would fit with the scenario shared. So currently looking for price to at least eventually take the double bottom over here, and of course we're going to continue observing the range as probabilities generally are higher for price to move to the upside, and we do still have some bullish CVD divergences as well. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.